What's up everybody, welcome to the Stocks channel. My name is Corey and today we see price action starting to break through critical resistance and we're starting to regain the bull trends. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today's SPY was up 0.41% and SPY did get the second daily close above this critical resistance zone right around 448. And if you look at the moving averages, we now have regained the bull trend of all of the moving averages stacked to the bullish direction, which means the 5 is above the 13 is above the 20 is above the 50, and we have all of the moving averages above the rising 200 daily moving average. So just like that from SPY on closing prices, we pulled back just under 5%, and that is exactly what we were looking for. Anywhere between 3 and 7% is completely normal for a pullback. And back on August 3rd, I told you do not buy into that fear and that fear mongering crap that the stock market was going to crash. And here we are right back in the bull trend after that pullback with higher lows and higher highs on the daily chart and breaking through some critical resistance, which tells you you need to be objective and follow the chart. Just a few days ago, we had this bearish engulfing candle and I started to get questions about a super crash that was apparently coming, and this was the catalyst that was going to propel SPY much lower, down 15 to 20%. And when I looked into it, the same person that was saying that a super crash was now in order and it was now in progress and we were starting to crash, just yesterday is now saying that we had a rally as expected. So if a super crash is in progress, then how are we getting a rally as expected? Just be very careful what you're listening to and what noise you're taking in, because it's very easy to miss out on rallies when you have fear-mongering crap that you're following that has no objective basis on how these claims are made. You need to read the chart and the price action and stay objective, or you are never going to be able to trade the chart. If the chart is bullish and you're buying into fear mongering and you're scared, it is going to be very difficult to take long trades because you're going to have this constant fear inside of you that is preventing you from staying objective. All last year was a bear market and all this year has been a bull market, and this is going to remain a bull market until it's not. And I always give you those critical risk levels, and on SPY that was 442. And as you can see, once we got back above 442, we're back on to risk on behavior and the bulls are buying up the dip. So I'm giving you these critical levels. There's no fear mongering here on this channel, and I'm telling you exactly when you need to get risk off and when it's okay to be risk on. We are still in that risk on environment while SPY is above 442, and it does not get any simpler than that. And if you want to, you can now raise your risk level to the 20 daily moving average right around 444. So from here, the next bullish price target in SPY is going to be that gap fill above at 455. And if we blast through that price target, we're going higher towards 460. But do keep in mind, both of those price targets are currently outside the upper Bollinger Band. So it is possible we could get a pullback to a higher low before we continue to those higher prices. So do keep in mind the upper daily Bollinger Band is going to be a level of resistance you want to pay attention to. The downside support will still be 448 and that 20 daily moving average of support at 444. On the NASDAQ 100 triple Qs, we were up 0.56% today, and the triple Qs are trying to get the bull breakout from the resistance trend line and that resistance zone right around 375, and today was the first day of breaking out. Usually I say wait 2 days, and as you can see, the gap fill above 380 is currently outside the upper Bollinger Band. So it is possible the triple Qs need to do a little backing and filling for that higher low before we push into the 380s and 390s. In the triple Qs, you now have critical support down here at 367 to 368, and as long as we are above that support, we are still likely putting in higher lows and higher highs. And another support level I would pay attention to is going to be right around 370 to 372. In the Dow Jones, we were up 0.22% today, and the Dow Jones had a daily close back above the 20 daily moving average. So it is possible the Dow is also trying to go back into a bull trend, even though that gap at 340 never filled. Now, you can never completely rule out the possibility that gap is still going to get filled, which is why you should be managing your risk right here at this level at 346, because if we break below 346, then you know to get risk off and then start expecting a possibility of going down to fill that gap. If you just assume that gap has to fill now and we start rocketing higher towards 360, you are going to be very sad about making that assumption, so make the price action prove it. Another good risk level is the support right there at 348, and the next upside resistance will be 353. On the Russell 2000 IWM ETF, we were up 0.38% today, and we did get the daily close above critical resistance at 188. So if we can now hold above this breakout and hold this level as support, the bottom is likely in, and this test of critical support at the rising 200 daily moving average is likely over with, and we can see IWM continuing into a bull trend. I have the bull trend taking us all the way into the 200s from the weekly weekend technical analysis. So if you haven't seen why IWM is bullish on the weekly chart, you need to go check out that video. And on the daily chart, just manage your risk around 188. On the ARK ETF, we are up 0.69% today, and ARK is trying to break out, and this is the critical resistance zone between 43 and 44.5, and if we break above 44.5, we're getting bullish, and that means we could be heading all the way back up towards that gap fill below 49. So we're very close to knowing if ARK is going to get bullish because we're very close to the critical resistance breakout levels. Any rejection from this resistance could take us back down towards 42. On the VIX, we were down over 4% today, and the VIX did finally crush down towards that price target at 14, so we can now delete that arrow because that prediction has played out where the VIX would go up towards 18 and then crush back down to 14. That was my prediction all along, and it finally came true, and now the VIX is outside the lower Bollinger Band. Remember, low VIX in a bull market is completely normal because the VIX is a measurement of fear, and in a strong bull market, you typically have low fear. Last year was a bear market, which meant the low VIX was time to sell. This is a bull market, and there's no guarantee a low VIX means you need to go sell. On Bitcoin, we're currently down about 1.5%, and Bitcoin is trying to hold that breakout above 27,000, but so far it is not doing so. Remember, Bitcoin needs to break above that 200 daily moving average before we can get bullish, and that means at least 2 daily closes above that level, which is at 27,500. So we need a few more days to see if Bitcoin is going to get bullish or if this is just a lower high rejection before we go to 25,000. On Tesla stock, we were flat on the day, only going down 0.11%, and we did get the second daily close above 255 as we're starting to develop the bull trend, which is evident by all of the moving averages starting to cross back over. If Tesla regains the bull trend and we can hold above 255, I think we're well on our way towards my price target at 295 and the gap fill below 290. Manage your risk at 255 and this strong support zone at 240. On Apple stock, we were up 1.92% today, and Apple had another bull breakout above 185, and above 185, we're likely going to fill the gap above 190. However, the daily Bollinger Bands are not going to allow us to do that just yet. So there's a good chance in Apple we need to retest the breakout, which could bring us back down towards 183. And then from there, we should have an easy trip higher towards the gap fill at 190. If we go straight to the gap fill outside the Bollinger Band, there's a good chance that's going to be an easy short trade because we'll be overextended to the upside. So jumping back over to the S&P 500, I've continued to warn you all year long that this is likely going to be a bull market that could take us back to the previous all-time highs. And all year long, the bears are ignoring the chart, which is a very dangerous way to trade. If you are trading the market, you are trading the price you see on the chart, and the market could not care less about any of your bias or any reason on why you are bearish because the price on the chart is the only thing we are able to trade. This is bullish price action, and this is still a bull market, so do not buy into any of that fear-mongering crap that the market is about to crash and that we're about to go through some crazy deep dark recession. If that happens, we'll see it on the chart and we'll break down below the critical risk level and we'll instantly know to get risk off. But right now we are back in the risk on territory while SPY is above 442. We are absolutely crushing this market on Bank Trade Alerts and the Stocks Channel Discord server. So if you want to come crush the market with us, consider joining us over on Bank Trade Alerts or the Stocks Channel Discord server, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.